Well, it was largely a non-event. The BOJ came out and reiterated market expectations. So there was some potential speculation that perhaps could there be a surprise. But also, I think there was an expectation that perhaps the guidance of future forecasts may have a bit of a nugget for the market to focus upon or investors to focus upon. But by and large, they really came in and met expectations, very little changes overall. But I think the more important aspect as we look forward is what will the next meeting look like? Because I think, as we look forward, when will they or if they get out of the negative interest rate policy? And I think the one question that hasn't been asked that much is, from a timing standpoint, what is their window, and could they go opposite what other central banks are doing, i.e., could they be in a position where they need to raise rates, or could they even raise rates when the Fed and the ECB are lowering rates? And so I think they've got a narrow window, and that window really points toward a sort of an April timeframe.
April timeframe. What do you expect the bond markets to do up until then? Given the fact that there's also talk about possible rate cuts in the U.S. around the same time period.
Well, the bond market movements are always a function of what is priced in and what are the expectations, and how do those expectations change. And if you think back of both the U.S. Treasury yields, but as well as JGB yields, think back to a few months ago when 10-year JGBs were starting to approach the 1% level, and they pulled back quite a bit for a variety of reasons. And so, where do we go from here? I think we're going to be treading water for a little bit in the near term. But for us, our team in Tokyo, they're somewhat neutral on JGBs, but they believe that the curve, which is very steep in Japan, is likely to flatten. And so when you look at the steepness of the curve, they tend to prefer the longer end of the curve.